Hey guys, what's going on? I'm just going to do a quick update on Bitcoin. Forgive me for my marked up chart. I'm just actively trading. Before I get into this, if you're not subscribed, you want to get updates when I release new TA videos, just click subscribe, click the bell, and then click on all. All right, so if you haven't watched any of my videos before, I'll just give you a macro overview. Basically, we had this falling wedge, which is typically a bullish pattern. You broke out, then you had a rising wedge, which is a bearish pattern. We just broke down from there. Now, at the area where we were breaking down, I basically said that you don't want to close a daily candle. Sorry, I'll go to the daily chart so you can see. I said you don't want to close a daily candle below this upsloping level of support from the lower region of the rising wedge. You don't want to close the daily candle before that or this 38.2 Fibonacci retracement that has been holding the price for several weeks, right? So this candle was a sign that we're likely going to dump harder. I would have expected that maybe from this candle, maybe we come up and do a little retest here and then get smashed down, but no. The sellers came in right away, smashed it all the way down. And this is a very, very impulsive, powerful move. So I marked out potential support levels based on both the Fibonacci retracement level and the price action, right? So we had a lot of confluence right here at the 50%. So as you can see, it was resistance right here, and then it lined up with the 50. So I assumed this would be a support level. I put out a video saying, basically, I think the price was right around here, saying, the daily candle hasn't closed. Maybe we can recover this level. But about 1 minute after I posted the video, this huge dump ensued, and yeah, we ended up basically $1,000 under it, right? So this level right here, the next level down to 61.8, which also had confluence with the price action, did not hold as well. Price just sliced right through it. Actually, I'm going to go to the smaller time frame and let's see if we had any response to these levels at all. Actually, these levels, they would cut through and they'd come back and back test it as resistance, then get smashed down. Same thing happened right here. Smashed down through, come back. This golden pocket range held as a resistance, and then we came down further. Now, the first Fibonacci region that actually did basically see like a little bit of a bounce off was right here at the 786 region. I wasn't expecting this level to hold at all, and it clearly hasn't since then, but I did make a Twitter post. And if you don't follow me on Twitter, I'll put a link to my my page in both the pinned comment and the description. Because sometimes if I see something on a chart, I want to post it quick, but it takes time to do these videos, right? Because I got to edit the sound and then I have to do the thumbnail and whatnot, and it takes a while to upload. Whereas a Twitter post, I can get out really quickly, right? So if you don't follow me on Twitter and you want to get quicker updates, I'll just leave the link. Anyway, at the time, it looked like we could potentially see a small bounce off this level. And the reason why I thought so is because we had a bullish divergence right at this 786 region. So basically we had a low, then a lower low, then we had a low, then a higher low on this RSI, this divergence indicator down here. We did get a bounce. So I posted that around here, around 26.2. We bounced all the way up to about 26.6. So it was good for about a $400 move. But then we just got smashed down. And as you can see right now, this is the new local resistance level right here, right? Actually, there's two. There's this 786, which we were under, and now since we came below it, it is the resistance. So as you know, former support once broken will be the resistance. So this is the resistance, and this downsloping diagonal line is also a resistance level. So knowing that, we can see there's a potential trade opportunity. I would be a little bit cautious. If you want to take this trade, you have to have a very tight stop because once again, if I zoom out, you'll see that we are forming bullish divergences right here, meaning the price is making lower lows. This RSI oscillator is making higher lows, right? So that's basically indicative of a potential reversal coming, although it doesn't always pan out. So knowing that we're so far overextended to the downside, and also, actually, let me check. Let's go to the 4 hour. Let me see how low, look how low this is. This is down in like 7. If I scroll back, so the last time this divergence indicator was this low at around 7, that was the very bottom of this move, right? So keep that in mind. We're at this level now. We are showing a bullish divergence on the 1 hour time frame, not so much on any other time frame, but the 1 hour bullish divergence, but we are under this resistance. So this is really easy. You know that if this level breaks, if this 786 level breaks along with this downsloping level of resistance, then it's good for a long trade up to the upside here, right? I would just long it from the break up to here. Just a quick scalp, right? Because there could be further downside, right? But we just haven't had a bounce on the short term yet. Now, if one wanted to enter a trade right here, you can enter right here. You can place a stop loss just above this 786 fib, and then you would target, obviously, you target the swing low right here. And that would give you a risk reward ratio of about 1 to 2.34. which is okay. You would risk 0.67% to get about 1.58% to the downside. And of course, this could be amplified with a little bit of leverage. But again, I would be cautious using leverage on a short position when the price is so far extended downwards and the divergence indicator is basically at a 7 on a 4-hour time frame. And the last time that happened marked the exact bottom. Now, in previous videos, I said that I suspect that if we break the 786 level, I would anticipate a further drop down to around the 24,005 region, right? And that would be around this swing low here and the former resistance level right here. So here, although we have already came back and did a retest at this level. But yeah, I do think if, we have a quick bounce back on a short term, kind of reset the oscillators, and then we can have one more push down to this range, that would make a lot of sense. And the reason I'm saying that is because there's a lot of liquidity down here for the market maker to take, right? I can see from basically this liquidation chart, I can see that, we see a lot of shorts have piled up, and there's just a lot of liquidity down in this zone, right? So as the price is coming down, the shorts are piling up, which is good for upside continuation after we reach our downside target. But I do think there's a lot of liquidity around this 24,000 to 24,500 region. A push down there would kind of make sense. But anyway, just focus on the smaller time frames right now, and whatever happens, happens. Right now, go back to the 1 hour. Here are the levels, right? So if you want a short, stop loss right here. If this breaks, you could take a long right up to here, right? So what that would look like, I just showed you what the short would look like. What the long would look like would be basically, say for example, you get a 1 hour candle close above this level, you can enter the long. You would target this level right here just to be conservative, and you would place your stop loss obviously below this resistance, which you would hope would serve as a support level. If you wanted to be a little bit loose with it, you can put it right there. So you get basically two supports, right? You have the support from the 786, and then you would have support from this diagonal level of resistance, which you can anticipate to be flipped to support. So you would risk 0.87% on the trade for a potential 3% to the upside, giving you a risk-reward ratio of 1 to 3.44. So that's pretty good. Also to the upside, again, if you wanted to use a little bit of leverage, you can. I just wouldn't go too hard with it, right? But yeah, these are basically the short-term trade setups. Long term, let's take a look at the 4 hour. 4 hour, we're really not oversold, but we're really extended to the downside here. Oscillator is at a very low level. Previous times this level has marked that we were at the bottom, but this target does still stand out to me on the longer term, right? So maybe, now that we broke through what I thought would be these support levels on the way up, they could serve as a level of resistance, right? So you got, once if you can get past this 786, right, then you're going to have this golden pocket range as a potential resistance, and of course this 50% level would be a main level that I would target if the price did come back up. I would anticipate this 50% to be a resistance, even though we cut through it so quickly on the downside. We do have former price history there, right? One way you can find potential resistance levels on the way up. Just draw from the swing high down to the swing low. So say theoretically this was the swing low right here, then you would just look to these levels as the potential resistance level and just see if you can find some confluence, right? But yeah, I would look basically to this 50% retracement level that we broke through, because it kind of lines up with this previous price action, right? But yeah, and you know what? If this level breaks, if the 786 breaks, then yeah, I would look to basically here. I'll get rid of this so you can get a better look. I will look down around this 24,005 region, 24,006. And, the thing is, a lot of people are going to be looking at this level, and you got to think, like, how does the big money think, and what do they want to do, right? So they want you to be liquidated, okay? So they know around here, they know a lot of traders are looking at this level, right? So what they might do is, if the price does come down here, they might try to push it a little bit past, right? A little bit past, get everybody faked out, and that way you have breakout traders that have their orders queued up, their limit orders. So if the price comes here, they're kind of triggered to sell, anticipating further downside. So maybe they're going to push it down so those orders trigger and they can buy those up and then push it back up, right? Again, because we can see here that a lot of people are entering shorts. So this is the shorts, these are the longs, and there's way more shorts right now than longs. And basically retail traders, they pretty much always do the wrong thing. So as the price is dumping, they tend to sell. And as the price is pumping, so they buy these big bullish candles, and then they sell these crazy crashes, right? So a lot of people are shorting around here, anticipating a little bit further downside. So when the big money that is actually moving this market is satisfied with their move to the downside, they get their fill, they're going to push it up and try to liquidate all these shorters, right? And then use that as momentum to the upside. Anyway, yeah, that's just a quick analysis on Bitcoin. Just one more time to recap, I'll go to the smaller time frame. As you can see right here, this is the, I got rid of my fib, but anyway, basically the resistance is right above here, the 786 fib. So if the price breaks above this diagonal resistance and the 78.6 fib I showed you earlier, the move is to the long. You can target right here, or you can target right here. Be relatively conservative with it, or what you can do if the price is moving up, just click and drag your stop loss up to follow it up, right? So that way, if you have a big move, you're going to get the bulk of it. And if the price does turn around, then you're going to get stop loss in a slight profit, or at the very least break even, right? If you are right on this trade. To the downside, if one was to enter a short right now, you could probably get like a 1-to-2 risk reward ratio, which I already showed you, right? So you just basically target this swing low, or you can do the same thing as the price is moving down. Just trail your stop loss down along with it, and maybe if it's a big dump, then you can get a really big profit off that. But anyway, that about wraps it up. It's a frustrating market conditions right now because, even though I'm day trading this, and when I day trade, I can make money off the crashes too, or the longs. It doesn't really matter for my trading balance, but I keep most of my coins offline on a ledger. So, my spot balance that I'm holding is getting wrecked right now, right? So it's okay for trades, but yeah, it's overall, I'd like to see the market go up just as much as you probably do. Anyway, that about wraps it up. If you like the content and you find it helpful, click subscribe, click the bell, click on all. And if you're looking for an exchange to use to do some of these trades, I'll put a link to the one I use in both the pinned comment and the description. I really like it. It's got a really good interface, a lot of cool trading features. I can use a little bit of leverage on there. And the best part for me is they don't require any documents, right? So there's no KYC. But yeah, you may need a VPN to use it, depending on your location. So I also put a link to a promotion on a VPN in both the pinned comment and the description as well. All right, guys, just a quick update. Hopefully that helped. Take care. Have a good evening. Bye.